Good morning. Today is Monday, November 24th, 2014. This is Dan McElwee of Ventura Wealth Management, bringing you our weekly economic newsletter, The Profit Margin. We begin with our statistic of the week. The riskiest industries for investors and creditors may surprise you. A recent study ranked appliance repair, recordable media manufacturing, cigarette wholesaling, and small house appliance manufacturing at the top of the list. We turn to Russia for our global perspective. While low oil prices and gas prices may be a boon for the U.S. consumer, the move has rocked the Russian economy. Lower oil prices are costing the Russian economy approximately $100 billion per year. To make matters worse, Western sanctions have cost the Russians an additional $40 billion. In our chart of the week, we see leading indicators rise. The Conference Board's index of leading economic indicators rose again in October, up 0.9% from September and up 6.8% year over year. This should signal continued improvement for the U.S. economy. And now for our weekly commentary. Up, up, up we go at a seemingly dizzying pace. The Dow Jones Industrial Average and S&P 500 both gained over 1% on the week, and the Nasdaq rose 0.58%. Many of the major U.S. indices are approaching gains of 5% for the fourth quarter, even after the damage caused by the sell-off from September into early October. In what seems like the first time in a long time, both international and emerging markets kept pace, with the MSCI EAFE and MSCI Emerging Markets Index ticking up over 1% as well. The fixed income market saw a little change. The 10-year Treasury stands at 2.31%. Stimulus was the word of the week, as politicians and central bankers around the world continued to pursue policies to reinvigorate their respective economies. After Japan, the world's third largest national economy, fell into recession, Prime Minister Abe announced postponement of a higher consumption tax. China cut interest rates for the first time since July 2012. And the European Central Bank began buying asset-backed securities. These moves, in three of the world's four largest economic zones, sparked last week's rally. And in the United States, the economy appears to be continuing to strengthen, albeit from a relatively low level. Leading economic indicators show improvement, and in a shortened trading week, we will see multiple reports on the health of the consumer. It is not unreasonable to think that the slack is starting to disappear. Is this the beginning of a real global recovery? In the week ahead, we will receive the Dallas Fed Manufacturing Survey on Monday. Tuesday, we'll see the GDP report, Case-Shiller Home Price Index, and consumer confidence. Wednesday is our busiest day of the week with the durable goods orders, jobless claims, personal income and outlays, and new home sales. Thursday, markets will be closed in observance of Thanksgiving, and Friday we'll receive the Chicago PMI before the markets close at 1 p.m. Thank you, have a great week, and a happy Thanksgiving.